Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-timeframe technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. It's definitely time for an update on the situation that currently we're having on GBP USD, as the market has just completed the pattern exactly as we wanted to see from our previous analysis. So now what I want to do is give you a new full breakdown of the situation that currently we have on the pair to show you where is the next opportunity for it and how we will be looking to capitalize on the next move for the pair. Now, as usual, I will keep the analysis as educational as possible. So first, we will be speaking about this pair from a technical perspective. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are currently doing in the market. And if you're able to read and follow what the biggest banks and institutions are doing in the market, obviously you do have an advantage over your competition in the market. And by the end of the video, by using the combination of the technical and the order flow aspect of this pair, we will be able to understand where are the best probabilities for a trading opportunity on it. And you will also have gained some very key concepts that you can, some very important key concepts that you can apply immediately to your trading, and that will make you a better trader. So without further ado, let's get straight in the video. Now, starting here on the monthly, what we can see. Now, from a monthly perspective, we consider the market has just completed a W formation at the neckline and is currently creating the continuation to the upside. Now, in general, if you have a W formation, what you expect is for the market to go and complete the pattern exactly at the previous resistance, which is now turned support, aka the neckline of the pattern itself. This area here, which is previous resistance, which is now turned support here. And what you expect is for the market to go and complete the pattern before creating the continuation to the upside. So this is exactly what we see that actually played out from a monthly perspective. We had this W formation. The market completed the pattern at the neckline, which is also the previous resistance, turn support, and completion zone of the pattern itself before starting this continuation to the upside. Now, another very important thing that we can see from a monthly perspective is that we have an impulse, a correction, and the continuation to the upside. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do take our Fibonacci from the low to the high of this impulse, what we can see is that the market retraced exactly to the 50% of the Fibonacci taken on this impulse, which is the Fibonacci level that was aligning the best with structure. In fact, the 50% was lining up perfectly with this area of previous resistance, which is now turned support here, and from which you expected the market to create the rejection for a continuation to the upside, which is in fact exactly what the market is currently doing. So on the monthly, everything happened in a very textbook way, following perfectly what you expect in this kind of situations. Going down on the weekly, what do we see? Now, from a weekly perspective, price action is quite clean as well. In fact, if we zoom in and we follow the movements and the way in which the structure developed from a weekly perspective on GBP USD, we consider the market had provided this move to the downside, followed by a correction, continuation to the downside, and at that point, after this continuation, you have a market which has provided a high at this level. Now, a high is a resistance zone, and after the market broke it to the upside with this impulse, previous resistance, as you know, in the market is turned support. So we had previous resistance that broke to the upside, and at that point is turned support, and the market tested it here and rejected it to the upside, which is again exactly what you expect in this kind of situations. And the market has provided the continuation to the upside that we would have liked to see from the first place. So again, also here on the weekly, everything happened in a very textbook way. We have also seen the market create this massive impulse to the upside, and what we can expect is one last move to the upside to really test the supply that we have in this area. Now, if you're asking yourself, why do we have supply all across this zone? Because This wick here is exactly the area from which the market started all this meltdown to the downside. So this supply is exactly the zone that the market should test another time before creating a rejection to the downside. And there is the possibility to see a deeper test of the zone to really grab the liquidity before the move to the downside can start. Going down on the daily time frame, what do we have? Now, from a daily perspective, first of all, we had spoken about the GBP USD quite a few times in the past. I spoke about GBP USD after the market had created this M formation. I made a full breakdown explaining all the reasons for which from here we first wanted to see a retracement and then a continuation to the downside for the creation of a lower low, and that is exactly what the market did. Then the market created this W formation, and from here I made a full breakdown explaining why I wanted to see first a retracement before the continuation to the upside, and again that is exactly what the market did. Then we had the creation of this overextended W formation, and I explained all the reasons for which from here we wanted to see the market create the move to the downside, and again that is exactly what the market did. Then we had this massive impulse, and when the market was here, I made a full breakdown explaining all the reasons for which we wanted to see a retracement exactly to this area to test this supply before the continuation to the downside and the creation of a lower low. And again, that is exactly what the market did. Then we had the creation of this inverted head and shoulders exactly as we wanted to see, and the market created this impulse and correction. After this impulse and correction, from here I wanted to see the continuation to the upside, and we said if on the 4 hours we will see a shift back to a bullish market, we can be looking for the continuation to the upside. But when the market reached this area, everything remained bearish, so impossible to be looking for any kind of opportunities on the pair. Then the market provided this W formation, and after this W formation I made a full breakdown explaining all the reasons for which from here I first wanted to see a retracement and then the continuation to the upside, and again that is exactly what the market did. Then we had from here a nice retracement, and from here I made another breakdown explaining why I wanted to see the market create this move to the upside, and again that is exactly what the market did. And then we had the market that created this overextended W formation, and with the very last analysis I explained all the reasons for which from here we wanted to see this move to the downside that the market has just provided exactly as we wanted to see. And I will link in description all this previous analysis, so you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. But at the moment, what do we have and how we can be looking to capitalize on the next move for GBP USD? Now, as I have already said, from a weekly perspective, we do have the possibility to create a new move to the upside to test in a deeper way the supply that we have before the move to the downside. And this is also confirmed from what we see on the daily. In fact, on the daily we can see an impulse and a correction which has just tested exactly the previous daily resistance, which was resistance here and resistance here, which is now turned support, because as you know, a structure level in the market, once it is broken to the upside, is turned from resistance to support. So the market has just tested previous resistance, turned support, and rejected it to the upside. Another thing that we can notice from a daily perspective is that after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse, and we can see that the market retraced exactly to the 50% of the Fibonacci taken on the impulse, which is exactly the level that was lining up the best with the structure as it was really inside of it, and from which you do expect the market to create the continuation to the upside. So how we will be approaching this kind of situation with students for a trading opportunity. Now, before I show you this, let's first go and give a quick check at what we have from a COT perspective. Now, if we check the data for the GBP, what we're actually checking is GBP USD. Why? Because all currencies on the spot are traded against the USD. So if you check the data for the GBP, you're actually already checking GBP USD. And there is one very important thing that we must notice. We must notice that we still don't have the new report, okay? The CFTC is late in releasing the new report. However, what we can see with the previous report is that net positions were decreasing. We went from having 12.7k net positions all the way down to minus 19k net positions, with 1.6k shorts added with the last report and 400 longs getting closed. And that is the reason for which we also expected this move to the downside, which is in fact exactly what the market did from our previous analysis. And you can, by the way, go and check it out in description. But at the moment, we still don't have the new report. Now, we can imagine that hedge funds have added some little bit more longs here, or anyway, even if even if they have not added the longs, we do know that all this area is strong supply. And if they were already accumulating short positions, there is definitely the possibility to go and hit this area to accumulate even more shorts. Why? Because if hedge funds will create a higher high here from a daily perspective, there are massive amount of stop losses, first of all, that are above this high. Second of all, many people, once the market will break this high, will start longing because people long breakouts. And that is perfect because if many people start longing, hedge funds can start shorting because they can use their liquidity to actually fill in their orders. So it would be great to see a higher high to grab all this liquidity before the move to the downside. So the way in which we will be approaching this with students is, as usual, being reactive and not predictive. Monthly, weekly, and daily, combined with the COT data, are the best time frames for the direction of the market. But the best time frame for confirmations and entries is the 4 hours. And at the moment on the 4 hours, we can see that the market is definitely still not ready for the move to the upside. In fact, we have a market which is still a bearish market and we can easily continue to the downside. So at the moment, we are still not in any long positions with students as all the structure is still bearish. So if this will remain the case, we will not be looking for any kind of longs as the market can easily continue to the downside. However, if the market inside of this area will shift environment from a 4-hour bearish market as it is right now to a 4-hour bullish market, at that point we can add GBP USD to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern with a higher high for the completion of this impulse correction impulse pattern to the upside to grab all the liquidity that is at this area before the real move to the downside can start. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.